Hi, everyone. I'm Maggie Lake, and I'm talking markets today with Mish Schneider, Chief Strategist at marketgauge.com. I'm so excited. I'm not even saying my name, Mish.
I've done that, I've gone through
I
a whole
know.
interview. Oh, yeah, by the way,
By the
it's
way, here
Mish.
I am.
And it's Maggie. And here we are together again. Yay.
We are. And thanks, everyone, for your patience. We had a little audio trouble. I mean, life's getting so complicated. It's all we can do to get on air every day, right, for all of us. But I know everybody feels our pain. But here we are, and we are so excited to have you, Mish, because wow, what is September so far? Quite a different feeling today on Monday as we begin this week. Stocks rallied across the board, and it was a really interesting session because in the afternoon it looked like some of those gains were losing steam and you were kind of wondering what was going to happen, and then it looked like we sort of got back up and added a little bit into the close, which was interesting. But overall, a brutal week last week, a rebound today. I don't know, do you feel like it does it feel real? How are you feeling about these markets?
Well, I think there are a whole new rotation sort of happening here, potential. So it's so interesting because you listen to people and they're going to tell you a story based on economic data and come up with a story that doesn't necessarily always get supported by what we see in the technical picture. And as you know, after so many years of talking to me, I prefer to do the opposite. I like to look at the technical picture and then decide what the story is. That picture tells 1,000 words kind of thing. And that's where today comes into play because we saw a nice bounce, obviously, in semiconductors after that major sell-off. But there's a sector that was so horrible in the first half of the year, and now as we're into starting the second half of the year, could be where the story changes. And believe it or not, that's transportation. Now, I'm not saying I would wait my entire future on that, but for right now, it's preventing me, that and one other thing, and we'll mention in a moment, is preventing me from getting overly negative. And we also have to remember, even though it was very, very painful last week, we're not at the August lows yet. So all we've done was sell off from another attempt at trying to make new highs after the market said, oh, wow, the Fed's going to lower rates and everything is just going to go crazy. And of course, that's not necessarily the case as we're seeing, which is no surprise to us because we've talked about this, right? Be careful what you wish for. So getting back to transportation. Right now, I'm finding that, I just did a whole article about it, I'm finding it fascinating because A, it's outperforming the SPY. B, even though it's not in technically a bullish phase, it's in an accumulation phase. It kind of had an inside day to Friday. And on the weekly chart, it is in a bullish phase in that it's well above the 50-day moving average. And all of my family, by the way, started out this week with what we call an inside week. And so it's a very small range within last week's big range. So it's up to, I think if IYT holds here, you're going to start to see a shift of, well, okay, semiconductors kind of peaked and they don't necessarily have to do very much right now. They can kind of flounder around, but perhaps the anticipation of the lower rates will broaden out the market rally even more to some of these inside sectors that ultimately, in spite of the doom and gloom, could be good for the overall market. So that's kind of what I'm looking at right now. I'm not trading. I have some few positions. I'm waiting, but I think the answer will be very obvious within the next day or two.
That's so interesting, Mish. And when you're talking about your family, you're talking about your modern economic family, which is a collection of different sectors and ETFs that you think kind of give a pretty broad picture and a good gauge of what the overall economy is doing, right? Because it's, even though we've been so focused on semis, it's not just one sector, right? There's a lot more to this very complex economy. Because you're so right about the narrative leading, and it seemed like investors, despite that real wobble we had in the summer, we've been talking about this for the last week. It seemed like investors came back from the summer and decided, okay, AI bubble was bursting, U.S. economy sliding into recession, sell, 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 pretty indiscriminately, even though the sort of center of it was NVIDIA and some of those high-flying mega techs. So it sounds like you're looking at the price action and saying, hang on a second, like maybe this whole thing isn't collapsing. Maybe instead what we're seeing is a rotation. Talk to me about the economy, because when you say transports, I'm thinking gauge of economic activity. Does it feel like the U.S. is sliding into recession? Because we have some people screaming the Fed's already behind the curve. things are even worse than anybody thinks. I mean, we heard some real bare voices come out. What are you seeing in the economy, especially if you're looking at stuff like transports and
Right,
retail?
and on top of what you just mentioned, Maggie, there's the SOM rule, which everybody said is 100% perfect in predicting recession. And right now, when you get an uninverted yield curve, 100% we're going into recession. But I don't necessarily, I think I think this whole market since COVID has changed. And when I say the market, I mean not just the market, I mean the whole economy and how we measure the economy. Let's start obviously with the biggest factor, of course, which is inflation. When people are saying, oh, wow, we're going into a disinflation period, they're looking at obviously the CPI that maxed out in 2022 at 8 to 9%. Yeah, compared to that, we're much better. But if you look at it pre-COVID, we're still at a higher inflation, particularly in certain areas like insurance and food, and some of the energy prices. And so, and precious metals, let's not forget about that. So there's the same thing with recession. You remember we were in a recession for 2 quarters, the technical definition, and then they came out and said, no, we're not in a recession. So I think if you're looking at all of the conversations, and then the Japanese yen, and then the whole carry trade, I mean, that's all you're hearing about is, this is going to be the end of days because the carry trade is going to happen and the dollar's going to collapse and the market's going to collapse and blah, 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 blah. It's so hard to sort out right now. This is when I find the most comfort. And rather than trying to be just another talking head predicting, is let's say what's happening right here. We could see that we peaked seasonally in July, and it was definitely led by the semiconductors. And is that a great surprise? Nothing goes straight up. We're cyclical, right? So now the question is, if that peaked with the new, and there's no doubt the Fed's going to lower rates, whether they lower it a quarter or at a half, I think they probably will lower it a quarter. Are we in a new paradigm of recession, or are we in a new paradigm of the economic growth now will, as we said before, broaden out to maybe the retail customer changes, maybe the transportation sector holds us up, maybe biotech hangs in there, with healthcare. We don't know this yet. So right now, to me, the biggest, besides the transportation hanging really tough, because that will be crap in a recession, is the junk bonds. And, people are still looking for high yield, high debt. And so even though the TLTs have rallied in the anticipation of lower interest rates in a potential recession, those junk bonds have held up pretty well too. So this is a place where you forget about old relationships. That's really what I'm saying here. And look at the merits of what's happening in the overall U.S. sectors. And you'll see commercial real estate through the regional banks. I mean, it sold off from the highs, not too bad. Consumer sold off from the highs, yes, the staples, but yet people say when people think there's more recession, often discretionary spending winds up picking up. Interesting little relationship. We still have some good news in tech, including the Apple launch today. If we look at the Russell 2000, yeah, of course, we're also off from the high, but it's about to get a golden cross on the weekly chart. And then let's go back to the tech. Even though we're off the high, we're still in a strong uptrend on the weekly chart. So I don't think anything has really changed other than rotation, and we have an election. That's another big factor. People don't know what the policy is going to be and how that's going to impact the economy as well.
Yeah, saying that's a big factor is sort of the understatement of the century, right? We're going to talk about that in a little bit. You mentioned, it's really interesting that you bring up junk bonds, because all along, I mean, how long have people been calling for recession? And it's the recession that never materialized, right? So now there's something, okay, it's finally here. But all those other times when people had the timing wrong, junk bonds held in. That was the thing that wasn't giving. And so you're right to bring that up, because that has been a consistent sign that maybe the recession talk is, overdone or overrated. Doesn't mean it's not going to happen, but it's a really important indicator for you to remind people, is it's not on all of our dashboards right away, right? Where we tend to be very equity focused. But this is why some of those other things matter so much. You mentioned retail. What is that? What does it seem like? I just feel like it's so, first of all, it just seems so hard to be a retail company and make money. I mean, it's such a difficult. environment, but some did, right? I mean, some of the stuff coming in from, I mean, it's always winners and losers, but how's that retail sector looking given the state of the consumer right now?
Well, I mean, here's another thing that we can discuss from last week when you had Dollar Tree and Dollar General crash. And people here, you see, the consumer is tapped out. And this is a very delicate conversation to have because I don't want to sound like I'm lacking compassion. But it seems to me that the lowest strata of the economic group, the people who would shop, and that doesn't mean I've never walked into a Dollar Tree. Of course I have.
No,
but
I know you mean generally
but generally the people who shop in those stores are at the lowest economic strata. And it almost seems to me like, although that tail is breaking off the body, if you will, of the consumer, it may not necessarily, and I hate to say it like this, matter going forward, because there's still a lot of people with a lot of money who are just being more discerning about how they're spending it. So like, for example, we're still seeing Costco and Walmart and Target. These stocks look really good. And then if you look at the classic discretionary, I mean, even though you could look at something like Lululemon, which, didn't look great, but, look at Ulta Beauty, which Warren Buffett came in and bought like crazy. It was one of my major stock picks and actually was rallying big right now. So I think what you have to do is wait a little bit to see where the consumer is going to go. And it makes sense to me that the big, let's spend money on everything after COVID is now coming down to reality of, okay, obviously I have to spend money on staples, which is why those stores. I want to go to stores where I don't have to spend a lot of money. Obviously Costco, you still have, I never always seem to spend a lot of money in Costco, but nonetheless, it just seems like, compared to going to like Whole Foods, let's say.
Yeah. Yeah. I mean, it's a trap, right? Yeah.
Right. I don't know, $500 in Costco. I never seem to spend less than that when
with a bag big enough to feed 800 people. I mean,
exactly.
I have a bag of pretzels that you could,
right.
sink a ship right now. I don't know what I'm doing with these things.
But the point I'm trying to make is what we're going to see, I think, still is the spending habits of the consumer change. And a lot of that is because of the biotechnology innovation of those diet drugs. I know I've been beating that drum for a while, but I don't think we can discount that. The little town I couldn't remember the last time in Kentucky, that was that big story you and I talked about. Mm-hmm. This is still something that's happening all over the place. And so I'm looking at the discretionary spending where people are still going to say, all right, I'll spend money obviously on what I have to. Maybe I won't go out and eat as much. Maybe I won't travel as much. And maybe
plenty of people still doing that. Christopher just pointed out the highest income are just fine. And
oh yeah, well that's what I'm saying. If you're going to count the economy based on the lowest strata, again, trying not to sound incompassionate, then the market doesn't care about that, and the U.S. economy is not based on that. Mm-hmm. If you're looking at the declining middle class, I think right now that's where you're seeing they're choosing more carefully. But if you're looking at the upper strata, they're spending money all over the place. But if we go back to the middle class where middle America is, so to speak, I still think we're going to see spending habits change where people are going to say, you know what, I'm going to spend the money on looking better because now I can, because I'm going to lose weight.
They're transformed. I mean, we've all seen the people that we walk past in the street because we didn't recognize them because they look like a completely different person. It's amazing. I mean, the health, I health revolution on the back of this, it hasn't really sunk in yet.
Right. So I know that doesn't necessarily sink our teeth into what should investors do right now. So I would.
I think you bring up a very, very interesting perspective that, despite what we saw last week and despite some of the very loud bears out there, as it has been for the last, better part of 2 years, this is a complex picture, and that maybe it's not as doomsday out there as it seems. It's definitely points of concern and things to watch, but your indicators are not showing you disaster.
No, all it's showing me right now is that if semiconductors, obviously if we have some kind of black swan event with semiconductors, that would probably affect everything,
sure.
Right? But if we don't, even if we're looking at the semiconductors, and I know I sent you that weekly chart, it's sitting above the 50-week moving average, well above the 200-week moving average. And even though it has sold off from the highs, it really hasn't even gotten anywhere near those August lows yet. So let's use some numbers. If SMH, which of course is where NVIDIA and a lot of the chip stocks live, breaks down under 200, maybe, that's a real cyclical sector. Maybe we could start saying that we're going into recession, but I rather say people are saying, you know what, I've got my new laptop and I'm maybe or maybe not buying my new iPhone. And yes, the data mining centers will continue to improve, but we know that the CEOs have been selling like NVIDIA stocks at the highs, et cetera, et cetera. Maybe that's just kind of seen a little bit of a peak, but that doesn't necessarily mean a crash, and the consumers shift. That's what we're looking at right now. If it breaks 200, like I said, it might get a little more painful. But at the same time, if it just kind of chops here between 200 and 250 for the next few months as we get through all this big period of time, especially the election, then it's possible that we'll see a rally. But it may not be in the classic sense of where we saw a rally from January to July in tech.
Yeah, it'll be a rotation, which, by the way, a lot of people have been wanting to see a broadening out of this rally. Just to wrap on semis, would you be buying any dip here, or is this an opportunity if there's stabilization or a bounce to sell?
I would probably say I'd be interested in buying a dip, but I would not consider what happened last week the dip to buy. I would actually, the old, when there's blood in the streets, I don't think we've seen blood in the streets in that sector yet. So I would either wait maybe for it to like break down and get closer to, let's say, 175, 180, or to be flexible, if this was the sell-off and the massive amount of money outflow that came out of this whole sector is kind of over, I would want to see it get back over, like, say, 250. So if we use NVIDIA, I mean, if NVIDIA gets down to like 85, 90, I think it's probably a decent buy to hang on to. At the same token, if it gets through 120, it's probably not a bad sign of strength. In between, this is exactly what I'm talking about. This is not where I'd be looking to play right now.
Good stuff. Want to ask you, before we talk about some of the bigger trends too, want to ask you about Bitcoin, because we haven't talked about that in the last couple of shows. That certainly got wrapped up in the risk off, selling that we saw. What's that chart look like?
Well, again, you can look at a daily chart and you can look at a weekly chart. And this is a really good time to look at the weekly charts. If you look at the weekly chart of Bitcoin, it basically did exactly what we were talking about with some of the strongest sectors in the modern family, which, by the way, Bitcoin's a part of. It dropped right down to the 50-week moving average and held. So as we started today, even though we saw a bit of a bounce, it's still very much inside the range of last week. So you got to keep an eye on it. If we break I wouldn't even say last week's low, we break last week's low, then most likely, people are saying we're going to look at 40 to 45,000. Yeah, that's possible. But I think it's also equally possible that if we can get back over 58,000, then that was the dip. And I still very long-term bullish, but this is all just a bunch of noise right here. I don't think it affects the overall long-term trend of Bitcoin. And I actually would rather be a buyer of some of the altcoins as opposed to, or some of the other technology in the cryptocurrency space than even Bitcoin itself, which is why every time Chainlink looks really bad, I buy more and then I get rewarded. I've been looking at some of the others, but Chainlink's been my big, but also blockchain, BLOK. Every time that starts to dip, I think it's a time to buy more, because ultimately I think what that's telling you is that the technology is still going to be very much a long-term, less volatile way to invest, and that cryptocurrency, particularly Bitcoin, will catch up to that. It's just a matter of what kind of volatility we have in between.
Yeah, it's such a good differentiation, because people in this space often go back to talking about the technology, but especially in times of sort of froth, people get very hung up on the coins or the some of the protocols, and we know, especially some of the altcoins, and there's a lot of it's a lot of high momentum risk in that.
Right.
But if you have a longer term perspective, which a lot of people do, it's a little bit different if you look at it as more of a technology play and through that lens.
Right.
Speaking of interesting things to look at, I just wanted to say that I've been reading the comments in the chat while we've been talking too. Ched said, I just wanted to say Mish flagging the cannabis sector as possible into rotation opportunity a few weeks ago was golden. Thank you very much. I think that's when we talked about, all the potential and, the growth spaces that could be in real estate. We had some fun with that conversation. So,
And I actually retweeted this today. I saw, I forget what the name of the company was that this guy works for, but basically he's talking about turning a lot of that commercial real estate, not into, vertical farms and cannabis places, but also into mining centers. That real estate becomes valuable. So remember we were saying, let's not worry so much about the crash in commercial real estate. It'll be innovated into something else. And now we have, a couple of ways to look at that. So I thought that was interesting too. But yeah, I mean, I know we're going to wait to talk about this a little bit, but remember we were talking about the commonality. I mean, everybody wants to talk about the differences, and people get so darn upset and angry. Whereas I'm looking at it.
And for the election, commonality.
Saying, okay,
let's dive in. Let's talk about it, because I think this is so interesting from my perspective. Because I talk to a lot of geopolitical analysts, and listen, we're all inundated with this. Those of us who live in the States, we've got a debate coming up, and you can't escape this stuff, even if you want to. And for investors, particularly with a shorter term or people who are trading, who have a little bit of a shorter time horizon, it just seems so hard to quantify the risk around this. It's so unknowable. There's so much drama around this. So you're approaching it by looking, what do you mean by that, the commonalities? Talk to me a little bit about that.
In other words, regardless of who wins the election, what can we pretty much know is going to happen? And guess, obviously, I can't know, but I like to use the word know because sometimes I feel like I do know, even though it doesn't seem obvious yet. And going back to that comment about cannabis, that is one of them. Right now, we know that Trump is talking very much about, oh, don't worry, I don't think it should be a harsh restriction on cannabis. I'm looking at the potential of legalization. And we know the Democrats were leaning that way, and they decided to wait for after the election to start talking about the descheduling. So that's number one. I think number two, both parties can pretty much have not really dealt with, which is the debt, right? Mm-hmm. So, and government spending. I always say it's just look at what they're going to spend on, but they're going to continue to spend money. They have to, because they both are really into reshoring. Both candidates, both parties talk about bringing business back into the United States. It's just a matter of how they talk about it. Is it anti-tariff, or maybe now Trump has been somewhat capitulating on getting too intense with tariffs because it could affect the dollar, which is smart. Is it that one likes to spend more money on defense than the other? No, they both love to spend money on defense. Americans couldn't possibly handle a government that says they're cutting back in defense spending. I think the big thing would be how much safety net spending there is on one party versus the other. But neither party is going to threaten Social Security or Medicare. They'll have a revolt on their hands. I mean, maybe the revolt will be people with canes as opposed to guns, but whatever. It'll still be very, very ugly.
Now that's an image.
So I guess the point I'm trying to say is those things. So where do all things lead? Are they going to cut the deficit, or are they going to be able to reduce the debt? No, they're not. I mean, not in any real way. I read that we have to cut by what, 12 to 16 trillion dollars to make any kind of big difference. And I can't see either party sitting down except making some cursory type of cuts to make them look politically. Let's face it, we've been a country that loves to spend money. We haven't worried about these things because every time it looks like the government's going to shut down, they come back and they print more money or give more money. Right. And even the Fed now is getting ready to basically throw its hands in the towel and say, okay, we did enough for inflation. It's time to stimulate the economy. So I don't think that matters who's the president for there either.
So what's the play on that? Is it a dollar play? Is it treasuries?
Well, I think TLTs I'm definitely into TLTs. What's so interesting about the TLTs right now is they haven't been able to break that 100 level. They keep flirting with it, but it hasn't gotten through yet. So I think it would be pretty safe to say to tell people, if it gets through 100, have a risk in mind, maybe under 97, because you don't want to see it break back. But that probably means that the TLTs are going to go up. Now then all the classic narrative goes back to what we said in the beginning. Oh, does that mean it's recessionary? Maybe. Does that mean it's stagflationary? Probably. Does it mean it's definitely going to goose commodities? Absolutely. And then let's go back to the reshoring situation. What's the impact of that? So you want to look at infrastructure. This is why I've been talking a lot about EVs, and batteries, and bringing the EV space back more into the U.S. NEO just made this huge move, but that's a Chinese company. All these things, I don't think it's going to matter in terms of alternative energy or infrastructure that requires all types of energy. Who's the president? Mass adoption is here. It just needed to have an overproduction of EVs in order to get a surplus of supply, in order to stop the buying, in order to lower the price, in order to bring people back into that space. So that's where I'm kind of looking. And then, of course, in manufacturing in general as well, what other kind of companies would be reshored into the United States. That I think remains to be seen, but there's a few companies out there if you research it.
I love that. It's a great sort of view of, and we talked about in the title of this, like looking for opportunity, not only in volatility, but kind of in what seems like a really uncertain future, but very smart to focus on, okay, there is a lot that could change. And also there's a lot that will be said. Always with Washington, watch what they do, not what they say. They say a lot. What they do is often very different from anything you hear in a campaign, right? So especially, we used to have people overseas get very, concerned about things, and there's a lot of political rhetoric that's going to be said. So super important to kind of keep your eye on those policies, especially as you point out that they have in common. You mentioned commodities. And there's a question from no one knows thyself. I keep hearing narratives about a commodity super cycle, but normally commodities drop during a recession. How could both of these be true? Or does one always win out over the other? Great question.
That is a great question. Well, right. I mean, the classic definition is, if you want the antidote to inflation, create a recession. I mean, that's happened in the past. It happened in the 70s, and it's happened in other periods of time. But to me, the more fascinating question is, can we have a stagnation and can we have inflation at the same time? Yes, I think that's kind of what we're already in, by the way, very nuanced in both areas. And can we have a super cycle in commodities? Absolutely, because if you look at what's happening in the world, every day there seems to be a different story geopolitically of a powder keg that could create an inflationary type of situation. And if we even put geopolitics aside, and I don't even want to talk about weather because that's so seasonal, we also have a strain on raw materials through the technology boom. And even if the technology stocks have come off a little bit, that's just price action. The trend of increased technology and mining centers and data centers and what that does to raw materials, that's why people are still very bullish copper, because they're saying there just isn't enough copper. So again, I don't see commodities dying. I mean, even grains look like they may have bottomed a little bit. Natural gas may have bottomed a little bit. Oil's been the biggest football going back and forth. But again, what do you want to look at? You want to look at the fact that people are saying there's low demand and too much supply, or there really isn't enough supply and the demand right now is sort of not really being reported, and China actually came in and bought a bunch of oil to fill their reserves at these levels. Who knows? I mean, I think you have to look at each thing very individually, which means this is going to be a tough time for the investor that's going to count on their financial planner to show them the way. Because most financial planners, and no offense to anybody who's out there, but they're not looking at the market the way I look at it, or some of the people that you talk to that really look at the individual areas of the market and look at them objectively.
Yeah, there's so many cross currents. It's such a good question for that reason. So Mish just mentioned supply and demand, which can have very different dynamics, right? But it's very complex. It's not. It doesn't seem like it's a binary choice anymore. But it's a good question because that is kind of the overarching thing that we've been told, that it's, during recessions this doesn't work. Right now, it doesn't seem like anything is one or the other straightforward. There's a lot of nuance, which is why we sort of have these conversations and pick it apart. I'd love to know, speaking of picks, I didn't even mean to set that up, but you kind of hinted at a couple, but you always have things that are on your mind. And everyone who watches this knows this is not financial advice for you. We cannot know your time horizon or your risk appetite or what you need to do with your money. Only you know that. These are just thoughts that Mish is kind enough to share about what she's looking at, where she sees opportunity based on the research that she does. Which, if you don't get that research, you should sign up for it, and we will put that link in our show description, so you can do that. So, what do you like, Mish? Because you're an out of the box thinker, which we love.
Well, before I answer that, I want to say a word about gold, because maybe the best barometer right now: recessions, stagflation, inflation, carry trade, disaster, can really be seen in the gold market right now. So what's gold doing? It's holding above 2,500. To me, that means that gold right now is saying that it's like our mirror. It's like holding up a mirror and showing us all the cracks that we have. And so if gold really declines here, I think we can be either thinking that this is, totally a disinflation, deflation scenario, or we start with recession. If gold continues to hold up here, I don't see how that's recessionary at this point. It just could mean, like I said, back to the stagflation or the super cycle. Silver, same thing. People say, oh yeah, well, the silver to gold ratio has definitely flipped in favor of gold, but keep your eye on silver. It's $28. It was still a lot higher than it was before COVID. And even though it's not at what it got to like 35 for like a nanosecond, it's still holding up. So you got to watch that, and you got to watch copper. That's the other big thing to watch here. I think that'll give you enough. But in terms of picks, I mean, let's look at the Bitcoin space. So in terms of the Bitcoin space, there's a couple of ways that you can trade it. I like to look at Robinhood, which I think looks pretty interesting on the chart right now. So that's one to keep an eye on. It actually closed pretty well today, but it had forget about inside week, it had an inside day to Friday. So I like to use that as an indication, especially when those inside days happen on moving averages. If you look at a chart, you'll see it did.
What do you mean when you say inside day?
In other words, so like Friday's range, let's say, was from like 20 to 19. I mean, that probably wasn't the range, but I'm just saying. So today's range was between, it didn't break the low of 19 or break the high of 20. It traded inside the range. That is a candlestick analysis, really. Basically, that usually means a pause. Investors don't know what to do. Is it 100% to say if it breaks the range one way or another, it's a follow-through? Of course not. But statistically, it is a very reliable way, especially when you start looking at where it's lined up on a chart with moving averages and stuff like that. So, that's one in that space. Another one, believe it or not, is Marathon, which is also in the crypto space. That also looks like it could be bottoming here. And look at my blockchain. I mean, that's also trading within a range between like 32 and 35. This is where I'm looking, because these are where I see the future. So I'm not saying jump in tomorrow necessarily, but that would be like probably some of the first places I would go. I also, get back to these EVs. I mean, obviously, NIO is Chinese, but Tesla's looking healthy. Is it looking like let's jump in right now? But it's looking very healthy. I keep my eyes there. And I don't know, Rivian was looking so good today, and then all of a sudden at the end of the day, it just kind of like gave up all its gains. But also in a range between, say, 13 and 15. So what you really want to find is the things that are, here's another one that I really, really like. Believe it or not, I can't believe I'm going to say this. I gave up on 3D ages ago. But Stratasys right now looks like it may have had a little bit of a reversal bottom, but it didn't confirm it today. So let me just look at the price here for a second. 650. If it breaks out over 650, you have such a low risk, and you have to say to yourself, 3D printing is one of those technologies that fell out of favor because of everything else. but it's still a thing. It's still a thing. So, that's kind of where my eyes are. Let me see if there's something else I
What
wanted
about
to.
MP? I think you mentioned MP as well. What's that? Is
Well,
that
there
because
was a
there's some
story.
people who don't want to touch anything, related to crypto. What's MP about?
Okay, so MP is MP Materials. It was a SPAC that had to do with rare earth minerals back when SPACs were a
Ah,
thing. And it's a mine in California. It's the biggest mine in the United States for rare earth minerals. And we have relied on China for that for a long time. And there was some story that came out about China basically saying, oh, we're not going to give our rare earth minerals to the United States. And MP had this massive $1.50 move in a day. And now it's just kind of waffling back around. So that's another one. I wouldn't jump in. It's trading between like 13.50 and 14.50. But if it starts to get over 14.50, 15, it's telling you. So I guess what I'm really saying is whatever stock you like, I would definitely be looking at the things that you think could trend, like the EVs,
mm-hmm.
or let's look at some of the beauty stocks. I mean, Ulta, we know, was it down at 320, then it got to 330, then Buffett bought it, it got back up to 370, then it went to 350. Now today it traded up to 380. So what if Ulta's going to do well? What else might do well? I mean, Elf looks terrible, but Cody's looking like it's trying to base.
Yeah.
That's another
So
one.
this is if we're this really brings us back to the beginning because you're looking at you always combine and I that's what I love about having a conversation with you. You do have a narrative, you have a thesis, you're watching their trends that you like because we consistently talked about the vanity trend and the energy, the shift to clean energy, but you're looking at those technicals too. And that's really guiding you and giving you the timing and the sort of go ahead to kind of make a decision. It's really a combination of both those things.
And I learned this from being 14 years as a commodities trader on the floor. Don't forget, back in those days, when the dinosaurs walked the earth, as I always like to say, we didn't have access to nanosecond by nanosecond news stories. All we had was price. And so we learned, oh, if, crude oil was rallying, we would buy it based on the chart breakout,
Mm-hmm.
or we'd see the momentum. And then after the close, somebody would go to their, dust off their old desktop and say, oh, guess what? By the way, OPEC Plus decided to cut back on
Right.
production.
So there was a story there, but you
Yeah,
were
there
right.
was a story there. So that's why I say I love to have stories because people love stories and I love stories. And the Modern Family tells a story, the economic Modern Family. But really the charts are first, I always will believe this in telling the story. Even if it's a story that comes out, but you're always, like cannabis, for example,
Mm-hmm.
as soon as today, it already started to come out that Trump and could be very positive cannabis, but it got down and it didn't break down and make new lows. So you had to say, okay, this seemed like forced selling. And once it started to come back up, you could say, oh, there's probably going to be some positive news about cannabis. And that's how I look at it. Not everybody's like that, obviously, but it has been an extremely successful formula for me, and especially since I get to talk to so many people like you and the viewers.
Yeah. Well, Mish, we appreciate always that you share it with us because it's fantastic. And we've got a really good watch list, all of us now, to keep an eye on as and some hope and optimism about commonalities as we try to navigate these crazy media times. So it's just fantastic. We appreciate it. We love catching up with you, Mish.
Thank you so much, Maggie. I'm so happy that you're doing this again, and it's really such a benefit to so many people.
Oh, thanks so much.
So
It's great
thank
to see
you
everybody
for.
in the chat. I appreciate it so much. And listen, there's a lot to talk about and a lot to sift through. So we're going to have a lot of fun doing that. So fantastic stuff. Thank you for you guys don't know, but Mish is just toiling behind the scenes, rolling with some really difficult technical situations today. But she was a trooper as always. And we're so happy she rolled up for it and didn't pull a plug. So thanks for that, Mish.